This episode of the Old Dogs REI Network is brought to you by Mino Studio.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is a show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dog, spelled D-A-W-G, find our podcast, and subscribe. Well, we have a fun show for you here today. We have a returning guest, so I thought this would be especially fun for those of you that are regular listeners here, because our guest today is a gentleman who appeared on episode number 017, so really early on in the Old Dogs REI Network here, and it was entitled From Software to Pizza to Properties. Okay, do you guys guess who it is yet? Well, if you haven't, it is Michael Blanc, and Michael is just an amazing guy that has been doing all kinds of exciting stuff, but one of the most exciting things that he has recently taken on is he has published a book, and this book is called Financial Freedom with Real Estate Investing. But let me tell you a little bit about Mike first. He's the leading authority on wow, this is a heavy title to carry here, Mike. A leading authority on apartment building investing in the United States. He's passionate about helping others become financially free in 3 to 5 years by investing in apartment building deals with a special focus on raising money. Through his investment company, he controls over $24 million in performing multifamily assets all over the United States and has raised over $6 million. In addition to his own investing activities, he's helped students purchase over 1,600 units valued at over $55 million through his unique deal desk and training programs. He's the author of the best-selling book, and the one we're talking about today, Financial Freedom with Real Estate Investing. In fact, I did a little search early on and found out that it was the number one selling real estate investing book on Amazon in the search that I did. So that's pretty exciting stuff. And he's also the host of the popular Apartment Building Investing podcast, of which I've been a guest on. So he's just a super guy, and information about him can be obtained at themichaelblanc.com. Well, Mike, welcome back to the Old Dogs REI Network.
Bill, thank you so much for having me.
It's such a pleasure to have you on. You are a guy who I admire greatly. You have done some wonderful things. You're not only are you a skilled and bright, intelligent investor, but also you're a guy who believes in giving back to and is a strong supporter of some great causes, of which I also feel very strongly about as well. So it's always a pleasure to have you on, Mike.
You are too kind. Thank you so much.
Well, tell us, man. You got a book, dude. This is great.
It is great. It took way longer to write and took way longer to launch as well. But it's really my message in a yellow book. It's all in one place. It's really what I talk about, what I'm passionate about, what I teach and what I do. So it's been a while, and I'm finally out with it. So I'm really really excited about it.
That's neat. Well, this is one of the things everybody thinks about. I've been working on one for I don't know how long, which I'll probably be working on it for that much longer still. Was that something you really had to discipline yourself to do, just to sit down and take all that stuff in your head, all the experience, and condense it down to a readable book?
Yeah, that's right. It was definitely a process, and I had to modify my morning routine to get that done, because if you don't do something on a regular basis, it just doesn't get done. So you just got to lock yourself up, 45 minutes per day and just write.
When I had you on, I know that you had an ebook type thing that you could download on your site, and it was great. It was great, especially because I was pretty new at the same time. I was, got a lot of great information from that. The fact that you've gone this far is pretty exciting stuff. And I know a lot of things have happened since then too. I know that you have a pretty aggressive training and education program now. Just tell me what you've done since we last talked.
Yeah, we have an extensive online courses that teach people how to buy apartment buildings with a special focus on raising money. We have coaching programs as well. We have live events now. We have one come up November 2nd. And then the really thing that's exciting is this deal desk. I think that you read in the introduction, and it really creates opportunity for us as well as everybody else. So people can find deals and they can submit them to us via a process. And then we partner with them and raise the money for them. And so we've done close to 1,000 units in the last 18 months through this program. And it's now our primary source of deals. And we just have to keep raising money. And at the same time, it supports my mission, which is to help people do their first apartment building deal.
Guy, that's great. That's great. Now, what kind of criteria do you have on those deals that people submit?
Well, it varies. It varies. For example, they have to use what we call our syndicated deal analyzer, which is our analysis spreadsheet. And you can, people talk about it on Bigger Pockets. It's probably the most popular multifamily analysis spreadsheet at this point. So it has to be in that. Otherwise, it takes us too much time to look at it. And then there's an online forum that we have through a membership program called the Dealmakers Mastermind. It's very affordable. We charge $49 a month, which is very, very low. But what it does, it lowers the bar. And what we look at, the people who have submitted the deals, they may not have the money for a high-end coaching program, which we do have, and some people can't afford that, and it does accelerate the process, but some just don't have the funds, but they hustle. And so they submit this to our deal desk, and then we do have a series of paid coaching calls, and they can take anywhere from an hour to 4, really depending on how ready the student is and where the deal is. And and at one point we accept the deal and work out a joint venture agreement, and then the paid coaching calls stop, and we move forward essentially as partners at that point.
Now, are those usually syndicated deals, or does it vary?
Yeah, they're all syndicated deals.
Gotcha.
Yep.
Okay, that's pretty exciting. So, are a lot of them first-time syndicators?
So yes, many are, but some aren't. So what happens is, as a first-time person, Josh Cooper, he brings us a 40-unit deal, which is just on the lower end of what we'll do in Birmingham. It's a great deal. Josh is a great guy, and he's like, oh my gosh, 40 units, so big. And we're like, oh my gosh, can't it be a little bigger? Because there's economies of scale, as we know. But then what happens is, he closes his deal and he's like, oh, I'm maybe a little nervous, closes the deal. But then the second deal that Josh will do, it won't be a 40 unit. I'm just going to forecast what it'll be, probably around 100 units. So we have people now, Philippe, he did a 68 unit or something like that. Then he did a 168 unit, the second deal. And now we were just awarded a 317 unit valued at $38 million. And that would be theoretically Philippe's third deal. So it's like this hockey stick in size. And so, they go, well, that was pretty easy, And then what they do is, they're required to raise a part of the money. It's not like we do everything for them. They really have to work at it. They have to raise money, and they raise more and more money, but then the deals get bigger and bigger. So it's very exciting.
Oh, that's neat. That's really neat. Now they have to find the deal and bring it to you, right? Do you help them find the deals?
Well, through our training, we do, right? I mean, we help them identify, hey, what should be a good size deal that's right for you? Where should that deal be? And then, of course, our training teaches them, how to generate deal flow, how to raise the money, et cetera. So we give them the tools. either through online training or through coaching. But again, I mean, we're not going to do everything for them. They have to go out and actually, look at deals, analyze deals, make offers. And the people who do that actually end up doing deals. And the people who expect deals to fall in their lap, big surprise, don't do deals.
Right. Kind of mentioned he had a 40-unit deal, but it wasn't really what you guys would prefer. Do you have sort of a cap on what size deals would be a minimum deal you'd get involved with?
Yeah, well, here's our challenge. So people in, quote, our position would love to do the biggest possible deal because it's the same amount of money to raise $5 million as it is $600,000, right? I mean, it might take us a few days longer, but really the payoff is much, much better for the larger deals. Plus, the property manager gets more and more sophisticated and becomes better the larger you get. So there's a lot of, from our perspective, it's much easier just to say, hey, we're not doing anything under 100 units anymore. But because my mission is to help people do their first deal, sometimes a person's comfort zone, while we push them, may not go to 100 units. And they're like, oh my gosh, I'm not even going to take a crack at it because I can't even believe in my wildest dreams that I could ever get 100 units. So the intersection is typically between what we're literally at the bottom end of what we'll do and what someone's comfort zone, normally between a 50 and 100 units. So that's typically where the first deals come in.
Gotcha. And the coaching that you do with them, is there a sort of a standard program, or you mentioned you have a sort of an hourly charge maybe in the beginning or something? What kinds of programs are there? Different levels of coaching there?
Yeah, I mean, so we do have a methodology. We have, and I outline this in the book as well. So, what is the methodology? It's a 12-month kind of system. First 30 days, then the next 60 days, and then the next 9 months. So we do have a methodology we use. Sometimes people come on board that already have varying levels of experience, or maybe they've already have our online course and they've already done some of the things that you normally do in the 30 days. So we will modify that. And we have, one-on-one coaching typically is what most people do, and we do have some group coaching options as well.
Now, is there one-on-one coaching with you, or could it be somebody on your team?
Yeah, so it's going to be someone on my team. I just no longer can handle the coaching calls. So it's I guess we have a good number of students at this point. I did just start a multifamily inner circle. We do that 4 times a year, and that is kind of where a chance for all of us to hang out with me and others. So it's more of a peer group, though I've opened it up to students and other people as well. So that's kind of how we're set it up. So we have a handful of coaches right now. They're all full-time apartment building investors, and I really like them, and they kind of share my passion for teaching people to essentially do what they've done, which is to quit their jobs.
Right. Well, let's talk about that, because that really is the focus of your book right now, and that is to become financially free with real estate. And there's people listening. Most of our audience, or at least the focus of our audience, is really those that are 50 years of age and older, and they're either approaching retirement and a little concerned that they may not have the funds to really have the retirement that they dreamed about, or they're already retired, for example, and they have their nest egg and they want to invest it, for the long term, that will cover all their expenses and things that they want to do, and maybe leave a legacy to their children too. So, what would you say to that audience there that are looking at this? And your focus, like mine is multifamily. Although, we talk about single family home investing and so forth on our show, my personal focus is really just like you said, the economies of scale of multifamily. You just can't compare that to single family home investing. And so, how did you come upon this? And how are people that you've been working with, how are they coming to financial freedom through real estate? And what is sort of the average time that takes? I know that's a kind of a loaded question with a lot of answers there, but
yeah. I think an older demographic is really in a unique position here, and there's really 3 ways that people can participate in the multifamily investing, and really the result is exactly the same, which is passive income to quit your job, shore up your retirement, and build generational wealth. The result is the same, but there's 3 ways to get to it. Number 1 is maybe the more obvious way is you are the operator, and you're the entrepreneur. You're finding a deal, you're analyzing the deal, you're making offers, you're raising the money, you're putting the property manager in place, you do everything. That's option number 1. And oftentimes a lot of people are the entrepreneur, and that's the path they feel called to, but there's 2 others. Another obvious one is you are the passive investor, especially if you're a little bit a little bit older in age, you tend to have more of a nest egg. Your salary has tended to be higher. You have more savings. You might have a 401k you can invest. So you have more to invest. And their problem really is, how can I get an above average return, but coupled with an attractive risk profile, which is multifamily, and then with extraordinary tax benefits you can get nowhere else in the world but the United States of America. And it's like you put them all together, and it's like insanity that someone can invest in some vehicle like that. And so they're in a unique position as well. And then there's something in the middle, and I call these people the money raisers. And they come from both camps. They come from both the passive investor and they come from the operator perspective. If you're coming from an operator perspective, they find that they don't really love analyzing deals. I know they don't really love that. They're not really spreadsheet people, but they really enjoy talking to people, and they're good relationship builders, and they really gravitate towards money raising. And so instead of actually finding the deals, they start raising money and then bring it to people like me. Also, passive investors, once you've invested in a couple deals and you kind of get a hang of this stuff, and maybe you educate yourself a little bit more, you're like, you know what? I got friends. And why should I keep my investing a secret? And they bring in their friends, family, and they start then raising money. And the nice thing about that is, when we bring on a money raiser, we basically bring them on as a general partner. They become literally one of us, and the split of the general partnership is very generous to the people who actually bring the money to the table. So as a result, they build up equity, they build up passive income, and they build up the wealth, just like the gal does who finds the deal.
Wow, that's great. That's great. That's nice. You have the options for folks, and there are different folks out there. One thing that I find that sometimes is frustrating here is that some of the most successful real estate investors I deal with are engineers. I mean, all these guys either come from an engineering background or have that bent, and it's really interesting for me. At the same time, I get it too, because you really do have to have an analytical mind to be able to understand the dynamics, especially of effective property analysis, and then when you get into syndication, there's a lot more details and other dynamics that you have to look at. What kind of split are you going to give your investors, and what's going to be the exit plan? All these factors that engineers, it's like they love it. It's not a big deal, and you're an engineer, right? I mean, so
I am former engineer. Yeah.
So
yeah.
I find that interesting, but that's great that you've kind of looked at that there's still a role for those folks that may not have that engineering background or even the engineering mindset.
Yeah, that's exactly right. And I don't think you need to be an engineer to do this at all. I also observe that a good number are actually engineers, because it's kind of a numbers game. And those are the kind of people who tend to gravitate towards more being the entrepreneur and the analysis. And then the people who are more relationship oriented, tend to kind of gravitate towards the other thing. And the truth of the matter is, you need both. And we see partnerships forming between people for that same exact reason. You got one guy who's just really, really detail oriented and Excel spreadsheet, and because he used to be a mechanical engineer. But then you have this, the former sales guy, and he, loves meeting with people, networking, calling people. And then sometimes you have both of those roles in the same person. And so if you're in one extreme or another, then see if you can partner with someone. And we're doing it all the time. And we partner with these money raisers who literally, that's what they're doing now. And that is their path of financial freedom. I talk about that in the book as well, because it is such a growing segment.
Yeah, that's great. That's really great. Well, you mentioned in your book that you look at a 3 to 5 year plan to financial independence. And did you kind of come up with that just from your experience, your personal experience, or working with people that you're coaching? Or can you elaborate a little bit on that? Again, that seems like a relatively short period of time.
Well, the truth is actually much faster than that. I was trying to be conservative and not oversell something, but the truth is that through my podcast, the guests and the research I did for this book, again for my podcast guest and other people I've spoken to are students. The truth is that, and I trace it down, Bill, to the exact moment someone decides that they're going to just get started with multifamily. I always ask someone, there's always a decision point when someone decides that now enough is enough and they embark on this particular strategy. And so from that point on, typically it takes 1 to 2 years for them to literally quit their job. And I have like a dozen case studies in the book. And I do that in the first third of the book because I try to shift people's minds about what they think about apartment building investing and what is actually happening out there. And there's a huge wide gap, which is the motivator behind that book. And what I find so encouraging is this, I call it the law of the first deal. And it says that if you do a multifamily deal of any size, you are 3 to 5 years away from quitting your job. In actuality, it's actually 1 to 2 years. Because what happens is that first deal is almost always the smallest, but always takes the longest. Typically, it might take 12 months, or maybe a little longer, or maybe a little less. But let's say it takes a year, and it's a grind, it's difficult, and it's small. It could be a duplex, for example. It could be a 10-unit. It doesn't really matter. What happens is when you close that deal, the second deal follows in rapid, almost automatic succession. In other words, you start becoming a magnet for deals and for money. And oftentimes, people have that second deal under contract before they even close the first deal. And then what happens is that next deal is bigger. So let's say the progression normally is 2, 10, 25, 50, and then plus at that point. And so you pick your favorite entry point. You pick your deal that's both achievable on the one hand and meaningful on the other. And it could be a duplex, but if you're a high-income earner, it might be a 20-unit. It doesn't really matter. The point is that most people have covered their living expenses with 2 or 3 deals. And so now we've reduced this goal of, oh my gosh, I need to have hundreds of units to quit my job to just one thing. And I love The One Thing, the book by Gary Keller. The one thing is basically your first deal. So now focus on the first deal. And so if I can help a person do that first deal, then they're done. Everything else, it triggers that law of the first deal, and everything kind of happens automatically. And a good number of people have quit their job in a year, and some on the more extreme have taken 2 years. So it's actually much faster than that. But 3 to 5 years is a little more conservative. But in reality, people are doing it much faster than that.
Wow, that's great. That's great. Well, I would think that some of the folks that you're dealing with, you've got, they're very motivated, but they really don't have the cash to jump right into an apartment building or a big apartment building. I know you say you raise money and you have different investors, but if somebody doesn't have the funds, but they got all the energy and the enthusiasm, will you take them aboard to help them acquire their first apartment?
Yeah, I mean, most people don't have the funds. And the experience, right? So, I guess the bigger question is, how does one get started when they don't have experience or funds, which is like 99% of the people? And even if you do have some money, whatever amount is, and you decide to use it for your first deal, you're going to run out of it at one point. So you have a very, very limited runway, even if you have your money. But what's encouraging is that you don't actually need, and this is a big myth out there, that I need years and years of real estate investing, typically single family house investing. And so the argument goes, well, let me do 5 or 10 years of flipping houses or wholesaling or buy and hold. I will tend to take that experience and the money I make, and I'll graduate into apartment buildings. And while that's not a bad plan, it just takes a lot longer. When in truth, you can just bypass all that and go directly at multifamily.
God, that's so true. I've known a lot of people that have worked with various coaches and have actually started off their first apartment building, like Joe Farrell. His first apartment building was 180 units. It does seem overbearing. I think one of the big fears that people may have is, okay, well, I want to buy an apartment. I want to buy a sizable apartment, but it's, even if I found a great deal on 100 unit, $1 million, $2 million or something along those lines, let's say I wouldn't even qualify for the loan on that because I don't have that kind of net worth. How do you deal with folks in that kind of situation?
Yeah, I mean, this all comes down to being a bit creative and knowing what's possible. So there's a variety of ways to overcome that. Number one is you can raise the money. I mean, we teach it in our course. I read a lot about it in the book. How do you actually go about raising money? So that's number one. In the process, you can find high net worth individuals who might be willing to co-sponsor a loan with you. Another approach that I talk about is joint venturing with people, and that's kind of what we do with the deal desk. But there's other people like that out there. And their biggest problem is finding deals, right? So if you're a hustler out there and you deliver someone a deal on a silver platter that's been analyzed, pre-negotiated in some way, and all you need is someone to take it down, there's a lot of value in that, right? And so when we bring in a new student partner into the deal, they also get a substantial amount of the equity. because the values of finding a deal is so high. So I think it really boils down to people's limiting beliefs, and it really is true when say I don't have the resources, I can't do this, but you know what? The truth is others do, and so my goal with the book is really to open people's eyes about what's possible, because I've seen that when people can visualize something, the details might not be there. The details but at least they see the steps and what's actually possible. And when they see that, their eyes go open. I'm like, oh my gosh, I didn't know you could do that.
Right. So would you actually take two students, like one that has the funds and one that has the deal, and bring them together in a deal desk?
Well, maybe. I mean, we've seen a few things. We've seen students partner together in that capacity. We've seen students who have a knack for raising money partnering with someone who has a knack for finding deals. In their deal desk, typically we partner with people who have found the deal, and we'll bring the money. Again, typically we encourage the student to raise their own money, and they might raise like $200,000, but they found a 100-unit deal that's going to require $2 million raise, and so their $200,000 raised really isn't going to get them there. But going from zero to $200,000 in money raised is a huge accomplishment. And what happens is when someone raises $200,000, the second time around, they're not going to raise $200,000. They're going to raise $500,000. And then the third time around, guess what? They're going to raise $1 million because of this law of the first deal, and they're building up this track record. And so it doesn't really matter, like I said, pick your favorite entry point. The most important thing is that you just do it.
Right. Well, you got that right. And that's where a lot of people just get, frozen in their tracks. Unfortunately, it's, just the fear aspect that just keeps them from making that first step. And once they do, and this is, again, I'm in a position such as yourself where I, talk to a lot of guests, and it's so many guests that I've talked with. The first deal is always the tough one, but once you have it, and once you've successfully, purchased that property and it's cash flowing, it's doing well, the other deals just start coming because, the brokers are seeing, hey, this is a guy that can close. This is somebody that can move forward. And then the bigger and the better deals just start coming. Did you see that also?
Exactly right. That's exactly what happens. And so, you become a magnet for deals because, brokers now like, oh, Bill's now closing on stuff. So they'll return your phone call. They'll start giving you a hard time. They're going to start calling you for deals that they haven't even listed yet. Your investors, there's going to be several, many that are going to be on the fence. Oh, let me see how Bill does first. And then you actually do something. Wow, he's actually really serious. He actually does it. Oh, I missed the boat last time. Let me jump on there. And so you become this deal magnet. And one of the reasons that the deals get larger is because your comfort zone expands so rapidly, as well as your confidence as well. So this is why, people who do a first deal get progressively larger.
Now, in your book, do you have a sort of a lot of the tools that folks will need to analyze or to effectively move into setting up financial independence for themselves through real estate?
Yeah, absolutely. Like I said, in the first third of the book, I talk about how people can overcome the lack of experience and the lack of funds. And then the rest of the book, I really talk about the steps of how to do your first deal. I'm all about the first deal. So the bulk of the book is exactly the steps how to do your first deal. In fact, I couldn't put everything in the book, so I created a free companion course. So if you get the book, there's a link in there, and you create your free account, and I have videos in there and checklists and downloads and other stuff. It would have made the book. Well, I can't put a video in the book, for example, right? So I really want to arm people. And again, while the details, I mean, it's a 250-page book. Some of the details may be missing. It should give someone a really good sense for, hey, is this for me? Because a lot of times people look at something and it all sounds good, but they're like, yeah, but it sounds too complicated, or it's not for me. It's not really possible for me. And they usually they dismiss it in the case of apartment building investing, dismiss it for what they think they know about it. And a lot of that is just simply misguided. And so really the purpose in the book is to set the record straight about what is possible. In fact, a report on what people are actually doing.
Now, do you have something that once, somebody purchases the book and maybe they get involved in the other information you have online, well, let's say they're looking at some of the aspects of owning a multifamily and they're thinking, oh, gee, this, sounds like it'd be great to have, but, dealing with a, property manager every day that, for example, is really running this 100-unit building, how can I effectively be able to make sure that this person is doing their job and doing a good job at managing my asset here? Do you have means for them to be able to expand in sort of that next level of education?
Yeah, I mean, I cover that extensively in our online course and the coaching, of course. But when someone's sitting in their cubicle and they're trying to figure out how to quit their job, they're not really thinking, how am I going to manage the property manager? It's like one thing comes after the other. And to me, I don't really want to overwhelm people. I talk about due diligence and managing a manager, but I really am light on that on purpose, because otherwise people just tend to feel overwhelmed. What I want them to do is I want them to consider multifamily as a strategy for them, and seriously consider it, and keep an open mind, and educate themselves. And you can do that by looking at our YouTube videos or podcasts, or Bigger Pockets. A lot of great information that's out there. And if they think it's right for them, at that point they can decide to invest in their education, and it'll be the best several $1,000s that they will ever spend on that. But you got to be clear about whether this is something that they want to be able to do. So in my mind, to answer your question, yes, very important, but after.
Okay, so in the beginning, really, it's just it's giving them a good foundation of what would be involved in taking these steps to financial independence, and then later on, there's other ways that people can move forward, right?
Yeah.
In more detail.
Yeah, because those details will come, and they're much simpler than believing that you can overcome your lack of experience or you can raise money to do a deal. Those are the huge, the mountains. And if you can move those, then the other stuff, how do you do diligence? Very important, but secondary to the first two.
So, just kind of looking at this in perspective, then, what would be, okay, somebody, they're got the book, they read it, this is where they want to go. What would you say would be really the next steps, or maybe the blueprint for somebody to follow to really, take the big step?
Yeah, I mean, I think the next step is educating yourself. I mean, there's so many different real estate strategies out there, and some gravitate towards one, some others. The next step, generally, no matter what you do with whatever strategy, is to educate yourself, and that could be signing up for one of our courses or coaching programs or someone else's. There's others out there as well. Really finding someone or organization that you resonate with, and then really going deep with them. And I just find that I've done it for myself. There's certain people I gravitate toward. I like them, I respect them, and I want to hang around those guys. And a lot of times, I have to buy their program or attend their mastermind or their event to be around them, and it requires an investment to be those. But I've always found that those things over time really open up new doors for me as well. So the first thing is clearly education. And then just simply doing action. And a lot of people talk about taking massive action. I'm always about taking, tiny action, every single day, and just building up a momentum of taking action.
Gotcha. And how did they get that first deal? I mean, what in terms of making that step there? Do you also help them in terms of how to identify? Do you talk about emerging markets or where to look? Those types of things.
Yeah, we kind of have I talked about the phases of the approach. We have a 30-day pre-launch sequence, and there's 4 things you do in that. One is you do your education. In this case, it would be our online course. Number 2 is to get very clear about your first deal. How big is it? Where is it? We have a methodology for helping people identify where those are. Then the third thing is to analyze at least 5 deals. So we have what's called a syndicated deal analyzer. We talked about that a bit earlier. It's an analysis spreadsheet for multifamily. So to get really comfortable with analyzing deals, it's the first most important critical skill set to have. And then to create what's called a sample deal package. A sample deal package is a investor package based on a real deal. It's got photos and projections, what have you. The only thing that's not real about it is you don't actually have it on a contract. Now, you tell your investors about that, but you use it as a conversation piece to start raising money from day one. So that's kind of the first 30 days. And I describe that in a book, and I call it kind of the pre-launch sequence. And that starts building up a lot of activity. And then the next 60 days is kind of the launch. And the launch phase consists of 3 activities. Number 1, you build your team. So you're calling property managers, lenders. Number 2 is you continue analyzing deals, that critical skill set. And then 3 is you meet with potential investors. And you do it without really any any kind of result or outcome. You just blindly analyze every deal you get. You talk to everyone who's willing to talk to you without really paying too much attention to an outcome. And that's just simply to take the pressure off the person, right? There's no expectation of any kind of money raised or deals found. Now, we found that, at least when our coaching students, when we do this, the people who do that work actually get a result. What happens is after those next 60 days is they'll actually have their team ready to go on the ground. They'll have a pipeline of deals already in varying degrees of readiness, and they have a handful of people already who've expressed interest in investing with them, or maybe they've already given them a verbal commitment that they want to invest. But that's really kind of the blueprint that we follow.
That's great. That's great. Just, looking again, this book sounds awesome, and I didn't get a chance to read it first before speaking to you, but I definitely want to read it. And I think that there's some great information you presented today that I think will be helpful for those folks that want to go ahead and purchase the book. And we'll have a link on it in our show notes that folks can actually go and just buy it online. So we want to be able to make it accessible for folks. And I just from what you've told me so far, I see just really a great opportunity here, and also just a great resource for people that are considering this, and maybe they just they haven't taken the step, and they've heard real estate sounds like a good methodology, but is that really what I want to do? And the fact that you outline it here, and I'm sure weigh out a lot of the aspects and what's really involved as well. Is there anything else that I missed? Do you think that maybe they should know that the book might also help them with?
Yeah, I would just say just keep an open mind, right? Because again, for people, what people think about apartment building investing, keep an open mind. Really take a look at it and see if it's something that they're interested in. And I'm just really excited that there's, like I said, the 3 ways that you can get involved in, and it really is it applies to almost everyone, right? So if you don't have any money but you're hustling, you can get into it. If you have money, you can invest passively. If you're a hustler but you gravitate towards raising money from others, or you have access to other high net worth individuals, then speak to them about it. The bottom line for all those 3 is that you need some level of education, right? So if you're the entrepreneur, you got to know what you're doing. If you're raising money, you got to know what you're talking about. But really what is exciting to me is that the opportunity is so broad for people of all age groups and demographic and income level.
That's what I love about it. Is it really? Gosh, I've talked to so many folks from school teachers to homeless people to engineers and successful individuals that have gone into real estate investing, and just their lives have been transformed. And that's what's so exciting about doing the podcast, is you get to meet so many interesting people, but it is so encouraging also at the same time that there aren't a lot of great ways to wealth out there, that you can say are so predictable for the most part, as multifamily investing. It's that people can actually become wealthy doing this without having any kind of special degree or what have you out there. Yeah, you got to get educated, you've got to know what you're doing, but for the most part it can be anyone that can do this and do it well.
Well, that's right. And I've done so many shenanigans in my life. I've with software, I've done restaurants, I've failed miserably, I've flipped houses, I've wholesaled them, did apartment buildings, I traded options for a while. So I was really on a very, I definitely was not on my 3 to 5 year retirement plan. I mean, I took way longer than that. And so when I took stock of all the stuff that I've done, and I did a side by side, multifamily checked off so many boxes. I was like, my gosh, why am I not doing more of these? And that's when I kind of shifted away at the time. I was doing, single family house flipping, and made great money, but there was it's not really what I wanted. And I was confused about what I wanted, which was, I thought was be a real estate investor. But what I really wanted is I wanted to control my time. And I kind of became a slave to the house flipping business, and it really was not where I wanted to be.
Yeah, that's the truth with multifamily. Yeah, it has all the right stuff, at least from my standpoint. And I know it's not for everybody, but it certainly, as far as options out there to be able to obtain cash flow and to be able to build up your equity and your wealth. I can't think of a better way to do that is as solid too, because you've got an asset there that is something that will always retain its value. Now it may go down, but it just historically it's always going to go up over time, and I think that there are so many positive aspects to multifamily. But wow, Mike, this has been really great. I could talk to you all day here, but I know you've got other things to do. Gosh, how could folks get a hold of you and reach you and find out about besides the book, which we'll have a link to, but they maybe want to find out more about your program, your coaching, and so forth.
Yeah, the book is on Amazon. It's Financial Freedom with Real Estate Investing, and my website is the Michael Blank. That's THE, and then michaelblank.com, and that's where you find all of our free resources. And if you want to get more serious, you can also explore some of our paid resources as well. But that's how you can find me.
That's great. And just a little plug here for the Analyzer. I think I've been an owner of the Analyzer since its beta stage, and I know it is great, and it's one of a few that I use that are just outstanding. And I would just say it's definitely one of the best, if not the best, out there.
I appreciate that. We're coming out on the next revision here shortly.
Oh, great. Well, Mike, before we go here, we have a tradition, and we know you're good at this too, because we have it on tape. So, Mike, you got to close us with your best old multifamily old hound dog howl.
All right, here we go. Ow! Let's do this.
I love it. All right. Well, Mike, thank you so much for being on. Really enjoyed this, and really, I just wish you the best on your book. I think it's gonna go gangbusters. It already is.
That's awesome, Bill. Thank you so much. It was a lot of fun. Thanks for having me on the show again.
Oh, it's my pleasure. And I just want to thank all our old dog listeners out there as well for joining us today. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we greatly appreciate it. Please note, old dog listeners, everything presented here, and there's a lot of great meat here that Michael presented us with, can be accessed in our detailed show notes on the Old Dogs website at olddogsreinetwork.com/blog, and just look for the episode with Michael Blank. Well, that's the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.